tax and bookkeeping infrastructure of their business. But we're going to go over at a high level some of the things that you can make sure you're doing to be compliant. So with that said, let's jump into the content. So, thank you for this nice picture of me here, Danny. My background is in finance and accounting for small businesses, and that's what we do at Bookmate. Bookmate is a bookkeeping and tax firm primarily for international founders of U.S. businesses. So there are a few regulations that pertain to international owners of U.S. businesses in particular that may not apply to the rest of the population at large. And that is what we focus on, which is why we're doing this webinar today with Firstbase. So that is who we serve. We serve people who live outside the United States who own U.S. businesses and need help managing them and filing taxes for them properly. In terms of what we do, it's split into a couple different types of services. Number one is going to be the tax filing services like we're talking about today, and that's done on an annual basis. Next, there are bookkeeping and ongoing financial management services, which we offer on a monthly basis. So you might be able to see those on our website under the monthly plans with the different amounts. And then we also offer custom solutions, market sizing, custom reporting, business plans, stuff like that. But that is kind of an overview of who we are, who we serve, and what we do. So let's talk a little bit about taxes. So in terms of what to expect from annual business tax filings, I wanted to cover three major questions here. Number one is who needs to file? And the answer to this question is most business owners. Now, some of you may not have an obligation to file, but the majority of people are going to have to file at least an informational return on an annual basis, even if they don't owe taxes, which many people do not owe any taxes in the US for the services that they are providing through their US business, which is fantastic. But most people have to file at least an informational return. And the way that I always explain it to our customers is like this. If you own, let's say, a Wyoming LLC or something like that, and you have a service corporation, for example, if you aren't filing a business tax return in the United States, and you're not filing a personal return in the United States, then theoretically, anybody could own that vehicle and there could be no reporting there could be absolutely no reporting whatsoever, and nobody would ever know what's happening with the LLC. So you file a report to let people know what types of transactions that you're doing on an annual basis, even if maybe you don't have to pay any taxes. Number two, I wanted to talk about the types of filings. So this depends mostly on the entity and the type of business that you have. So if you have a single member LLC, for example, you own a Wyoming LLC, a Delaware LLC, Florida LLC, and you own it by yourself, right? Typically, that's going to mean that you will file a pro forma 1120 and a form 5472, which is an informational return. Now, that may not be the case for everybody, but for the majority of cases, that's what we see. For a C corporation, that's a little bit more complicated. You have to file a full form 1120. So for C corporations, those filings are always mandatory. And then third, the third most common one we see is partnerships. So if you have an LLC with multiple members, oftentimes you have to file a 1065. But like I said, there are multiple different factors that can affect if you have to file in the first place and what you may have to file if you do have to file. So it's important to talk to somebody who can tell you what you need to file or if you need to file on an annual basis. And lastly, on this slide, I wanted to just talk a little bit about the process because everybody is confused or seems to be confused about what it is like to file taxes. What do you need to do, right? Because for a lot of people, it may even be their first time filing taxes in the United States, and they're concerned that they might not do it right or they may not know what information to provide. And in terms of the process, it depends on the firm that you choose to do your taxes with. At Bookmate, what we do is we send you all of the information that you need to complete in order for us to be able to do the taxes properly. And if you can send the information, we will prepare and file the return. That's what it's typically going to look like if you work with Bookmate or even a different CPA firm. Most of the time, they are going to send you a list of things that you may need to provide if you need to file, and then they will file And then they will take it the rest of the way and do it for you. So you don't need to worry about not knowing how to file as long as you work with somebody that can help you. Before I move on to the next slide, Danny, is there anything you wanted to say?
No, I think a common question here specifically about those filings, about the, and just maybe if you can say it again, essentially, because you actually did mention this, about the difference between an informational return and then kind of one that's required, and then also maybe the difference between kind of a state level and a federal level tax filing, and maybe just kind of those two differences. I know we get a lot of those questions on our side.
Absolutely. Absolutely. So there is a big difference between an informational return and a return that will be considered taxable. So for example, if you own a C corporation and you have a lot of profits, right, you will have to file most likely a Form 1120, which will lead to a tax payment. You say, our firm made $200,000 this year. We had $150,000 of expenses, and therefore our profit was $50,000, and we may have to pay taxes on that profit. Now, if you own, let's say you live in Mexico and you are a freelancer, you do design or software consulting via Zoom for businesses all over the world, and you have no US presence whatsoever. Oftentimes, you will have to file an informational return that will just inform the government of the types of transactions you're performing, but it may not result in, okay, now pay X amount in tax dollars. It won't result in that. It'll simply be an informational return that is required. So like I said earlier, the government doesn't have hundreds of thousands of LLCs owned outside the United States that there is never any report of or any trace of, right? So that's the reason why you have to file an informational return. And most of the customers that we see are filing informational returns, not tax returns that will actually result in a tax payment. But it's just important to talk to somebody to make sure whether you're going to file one or the other. So to the second point about state and federal taxes, most of the customers that we see are in Delaware or Wyoming or Florida or Nevada, who are in states that may not require a state tax. However, there are other, and that's in terms of annual income tax. However, in terms of franchise taxes and things like that, there are other fees that certain states charge on an annual basis that we'll get to later. So where I live in Minnesota, for example, you file your federal taxes and your state income taxes, and you have to pay state income taxes. But in Delaware and Wyoming and a couple other states, that's not the case. But there is a franchise tax, which, like I said, we'll talk about later. Danny, anything that I think that I may have missed there?
No, that's perfect. And not to pretend like I know more than I do, I think one thing that a lot of our customers, because they form digital businesses and kind of online businesses that aren't necessarily brick and mortar, that first piece that you talked about, I felt is really important. And correct me if I'm wrong, but I think I guess that term is coined like U.S. connected income, where that decision on, where the revenue or that income is and how it's generated will dictate whether or not, you will have to pay taxes, or if you file an informational tax return, as you mentioned. Is that correct?
That is correct. So let me just say a quick piece on that. So it does depend on if you have, like you said, effectively connected income. Here's what I don't want to run into. I don't want to say that most people may only have to file an information return, not a tax return, and then have somebody say, Max, you told me that I didn't know taxes. What's going on here, right? So I don't want to say, tell everybody on this webinar, oh, you don't have to pay any tax. But frankly, what I see from the Firstbase customers that I've spoken with already, because I've spoken to quite a few now, is most of them do not have effectively connected income. They have service-based businesses in other countries, and they have to file informational returns mostly. So I think you're totally right there, which is that if you don't have effectively connected income, you don't have an office in the United States, you don't live in the United States, you're performing services, right? Typically, that's not going to generate any kind of tax payment. You're 100% right there.
Got
So
it.
I think that's an important point to harp on for a second.
Perfect. I appreciate that clarity.
Yeah, absolutely. So let's go on to the next slide, which is what other requirements does my business have? And this is where we'll talk a little bit about the franchise tax. So to put some context around this, you can think about it this way. Now, this isn't exactly right, but this is the way you can think about it. If you own a Delaware LLC, for example, when you file your federal tax report on an annual basis, you will not have to file most times a Delaware state return unless you do business in the state of Delaware, which is very convenient. However, Delaware charges an annual fee to own a company there. Wyoming does the same. They charge an annual fee to own a company there, which is called the franchise tax. So instead of charging a percentage of people's revenue, for example, at the end of the year, they charge a fee. So that some people confuse the federal income tax piece or the tax filing disclosures and stuff like that with the annual franchise tax. But those are different things. One is federally mandated by the US government in Washington, D.C. You have to report to the IRS. And one is a report that you file to the state in which your company is formed. So you do have to pay the annual franchise tax on an annual basis. And the franchise tax is different from state to state. So that's one thing you're going to have to do on an annual basis. The second thing you're going to have to do on an annual basis is renew your registered agent service. It's really important to have a registered agent for your business in order to stay in compliance. And I believe Firstbase does that. Is that correct, Annie?
That's correct.
Absolutely. So that's great. And number 3 is industry requirements. Now, I put this here because there are different types of businesses that may have different reporting requirements, right? So it's not like every business formed in the United States has to only do income tax, franchise tax, and registered agent, right? It's not that those are the only 3 for any business. The majority of businesses that's going to cover, but certain industries have additional requirements, and we'll go into some of those cases in the next couple slides. But typically, when you're just starting out, and you're thinking, oh my gosh, there's so many forms, there's so much to do. What are the essential pieces that I need to have covered? It's annual tax reporting, your annual franchise tax, which is paid to the state, and your registered agent service. Those are the 3 that you need to make sure you're focused on right away. And luckily, between Bookmate and Firstbase, we cover most of those pieces. So I think we can move on to the next slide.
Hey, Max, sorry, before you jump in, I think a broad question that we get and that I see here already kind of in the chat is, this distinction. So like in an annual franchise tax, for example, in Delaware, that is a requirement on an annual basis. And that timeline of when what's deemed annual, I think would be helpful to maybe clarify, because I think there's a lot of like deadlines and such that, a business owner may have to manage. So, annual, in a sense for the franchise tax, what does that look like versus maybe, having to pay taxes based off of like your revenue and income for a calendar year, and just maybe how you make that distinction between like when and what you have to report on for an upcoming tax deadline, if that makes sense.
Absolutely. So at Bookmate, we deal with the federal tax side, and that is most likely going to be due. And I'll break it down a little bit based on the types of businesses. For most businesses, the due date is going to be April 15th for the federal tax. And however, for some types of companies like S Corps, which won't apply to the audience here, and multi-member LLCs who are filing partnership returns, it may be due sooner on March 15th. So if you are in the audience and you have a revenue generating profitable business that has multiple members in the LLC, you may want to get started a little bit sooner. But typically it's going to be either March or April, and there are exceptions to this rule if you change your financial year. But for the majority of people, the annual taxes for income tax is going to be due in March or April. Now, it gets a little bit different for the franchise tax because different states have different types of regulations for different um, types of companies, even. So I will also say that at Bookmate, we don't do the annual franchise tax. So I'm not, I'm not sure about all of the different states and all of the different regulations. Um, but typically it's paid once a year. Sometimes it's on March 1st. Sometimes it's on the renewal date. Um, Danny, I don't know if you would like to speak on that anymore, but typically it's going to be March or April for your federal tax, and then your franchise tax whenever your specific entity type is up for renewal.
Yep. The registered agents, not just with Firstbase, but if you're not a Firstbase customer, you're a registered agent that is at least required in Wyoming and Delaware. They can help you with that deadline. They will actually follow up with you on when that's due and all that sort of stuff. So that's something that you get with the registered agent in terms of supporting you as the business owner with those deadlines and timelines and things and how to pay those out to the state, on that level. So, that's something that you get, again, whether you use us or somebody else, that registered agent will be a great resource for you for that.
Absolutely. And so that's what I always tell people as well is if you're signed up with a great resource like Firstbase or Bookmate, basically the essential steps are going to be to check your inbox, make sure you're responding to emails, and be aware of the overall obligations of your business, right? That people are, you're likely going to get an email from your registered agent or some kind of message from your registered agent that lets you know when you have to renew. And as long as you follow the instructions to renew it, you should be okay. Now, one thing I will say is that the annual franchise tax is typically much easier than the federal tax. The annual reports don't require nearly as much information. And while there are fees associated with filing them, you shouldn't be intimidated by an annual state report for a franchise tax. Those are typically pretty simple. Whereas what we're talking about, income taxes, can get a little bit more complicated.
Perfect.
But now let's move on to managing your business's bookkeeping and accounting. So I see this all the time. I talk to tons and tons and tons of business owners from all over the world. And there are a few things that I see. So if you're in the audience, my guess is at least 30% or 40% of you are using TransferWise or Payoneer in your business in a significant way, or PayPal. Actually, 40% is, I think, a really low estimate. This probably describes most of the people in the audience. What I tell people is that the best way and the easiest way to manage your finances is to try to keep your accounts as organized as possible. And what that means is keeping as many of the transactions as you can between either Mercury or Brex or a combination of your bank accounts or your cash accounts. That is the simplest way. Now, for really small businesses, most people aren't going to need ongoing bookkeeping every day, week, or even month. If you're doing less than $50,000 a month or less than $50,000 a year, sorry, it's perfectly reasonable to keep your own books. And it actually is really easy. There are plenty of free solutions out there that can help you. And if you are willing to spend a little bit of money, I would highly recommend QuickBooks. What you can do is you can link up your bank account. I know Mercury links really nicely. I believe Brex links very well too. You can link those accounts into your QuickBooks or into your accounting feed. And all you do is categorize and sort your transactions. So let's say you run Facebook ads, right? It'll show Facebook ads and you can just sort it as marketing. Or let's say you get a payment, you can sort it as sales. And that will give you a baseline picture of what your business is doing on an annual basis. The problem with accounts like TransferWise and Payoneer, look, a ton of people use them. I talk to people every single day. They use them. So it's not something that you should be overly concerned about. But one of the issues that we see is that it's really hard to track the payments. you can't always tell what a payment is for, and they don't import nicely into accounting softwares. So at the end of the year, there's a lot more manual work that goes into determining what transaction should be put where, what transaction is for what payment purpose, and creating a picture of your business. So, like I said, in summary, it's perfectly fine to use transfer accounts, and a lot of international entrepreneurs have no choice but to use them. And I see it all the time, very normal. But if you want to optimize your operation and run the cleanest, smoothest operation, you're going to want to use a bank, some kind of bank that can be connected with some kind of accounting software. There are tons of online tutorials. We're happy to explain this in more detail, potentially put together some videos on it. But basic bookkeeping is very easy to do. Now, there are some regulations and things that the U.S. government requires of businesses, and one of them is to keep somewhat accurate of records. Now, to businesses under $100,000 in revenue, you don't need to be doing your books on a daily or weekly basis, like I said. It's not something that I would be overly worried about, but in the long run, it will make it much easier for you to understand the health of your business and to do any accounting or reporting at the end of the year if you have a just a basic profit and loss statement. It'll make it very, very easy and simple. Danny, anything in particular that you want to cover on that point, or are we good to move on?
No, we're good. I think the next couple slides, I think people would be keenly interested in.
Absolutely. Yes, well, I think people will definitely be interested in this one. I covered this a little bit in one of the earlier slides, but I wanted to do something specifically on deadlines, due dates, and penalties. So, important deadlines. For most companies, the deadline is going to be April 15th. However, what I tell international owners specifically is that you probably want to have your ducks in a row a couple weeks before that, if possible. And the reason why is because a lot of the US government e-filing infrastructure is run through SSNs, Itins, stuff like that. And specifically for informational returns like Form 5472 for single member LLCs, which will apply to quite a few of you, you have to paper file, which means you have to mail the documents to the IRS. So, if you come to us or any other accounting firm on April 13th and you say, hey, let's get started on my return, we would have to prepare, sign, and send that return via paper to the IRS within 48 hours. So for most people, you're going to want to get started by early March. Now, if you are a multi-member LLC, if you have an LLC with multiple owners, and you have, especially if you have a significant amount of profits, you're going to want to get started in the next week or so to make sure you can hit the March 15th deadline. Now, in terms of penalties, the penalties can be fairly severe for not filing Form 5472 in particular. The penalty for filing a late or incomplete Form 5472 is $25,000. So you want to make sure that you do it right and you do it on time. Additionally, for C Corps, all C Corps have to file a return regardless of revenue, and there will be penalties associated immediately with not filing. So if you want a C Corp, you definitely need to file. It's important to get started soon, but I mean, not necessarily, like, it's not like you need to get started today, but in the next couple of weeks, it's certainly something that you should be thinking about.
Cool. Maybe two follow-up questions here.
Sure.
What does the IRS and government define as when like taxes for an organization is due? So there's some questions here saying, hey, I received and formed officially and legally my business in, let's say, December 31st, 2020, but, I received, my EIN, in just now, does that mean I have to file still for 2020, even though I received my EIN in 2021, or vice versa, where like,
Right.
what dictates, I guess, to the government, an organization that has to file something? Is it when the certificate of formation or article of incorporation was formed, or is it when they receive their tax ID number?
So I would comment on this by saying that it's typically when the organization is formed. However, there are many variables that can affect it. And what I would tell that person in particular is that they should definitely contact us, and we can talk them through it, because I would want to learn a little bit more about the situation, where they're coming from, their industry and stuff like that, in order to make a final determination. Typically, it is when the company is formed. But there are a lot of factors that can affect it. So make sure to consult somebody on that in the next couple weeks.
Got it.
Typically, it's when it's formed.
Got it. And then maybe a stupid follow-up question, but I know I would ask it. If that's the case, and somebody, for example, maybe they're waiting for their EIN still, is that EIN a requirement to have on some of those documents? And if you don't have it, what does that look like?
Right. So if you're still waiting on your EIN, EIN is one of the form fields that is required on the tax documentation. However, one thing that we see is that, most companies that have to file will have to file by April 15th. And usually the EIN, just from previous years, if they don't have it in January or February, usually by mid to late March, they'll get it. And so what we can do typically is prepare it and then add the EIN in later when it comes. So we've done that in the past, but it sometimes you have to file in different situations, maybe with or without an EIN, although typically you always want to include the EIN. So hopefully and this is a unique situation with the IRS, because typically in the past, it hasn't taken this long to get EINs. But, the reason why it's taking so long for some people to get EINs right now is because the IRS is being extremely slow to process them. And that is across the industry, across the board. Everyone is struggling to get EINs. So that's the question is kind of crossing new ground in some respects, because it's never taken this long for the IRS to be issuing EINs. So it's never really been a problem before. So it's something that we're dealing with even internally for this tax season, and with COVID-19, the effects of COVID-19 still impacting the IRS and other institutions. So it's a good question.
Cool. And then I think the last one, and for those, and just, sorry, I'll pause here for a second. A lot of folks have asked questions that are very specific to your situation. Just for the sake of, the 80 people that's here, if you can reach out to Bookmate and their team for your specific questions. I'm kind of choosing things that I think are more applicable to the broader audience, just for, the respect of everybody. So apologies if some of your specific questions aren't getting answered. But the other question that we also get is, hey, I started my business in, let's say March 2020. I incorporated because I wanted to have it. We haven't generated any revenue. I haven't made any income yet. Do I need to still file for 2021? So I know, the informational tax return will be a requirement, but I guess just to revalidate if there's anything else besides that when it comes to tax obligations outside of the annual, like, franchise fees and such.
Yeah, if anything, it would be an informational return. And I've had people that do have to file based on their situation. I would encourage, even if you formed in March 2020, you have your EIN, you have a bank account, but you just haven't used it. I would definitely say that's at least cause for booking a meeting. You may or may not have to file, so you should get advice in that situation for sure.
Got it. Okay, cool. I think that's it for now. I know, again, the FAQs here will also be probably very helpful to everybody. So
yeah. In this, some of these have to do with tax. Some of them don't have as much to do with tax, but I talk to tons and tons of business owners from around the world every single day, and I get these questions all the time. So I'm assuming at least some of you have these questions. Number one, do I have monthly reporting requirements? I get asked this. So I think that there are a couple countries that I typically get this question from. A lot of countries in South and Central America ask me this question typically. And in India, I know that there are some pretty stringent monthly requirements. So I get a lot of questions about this from people in India. But there are no monthly reporting requirements for all businesses in the United States. So you will not have to, most companies will not have to report anything on a monthly basis. It is typically run annually. Some certain types of filings for certain business might be quarterly, but that's probably not going to apply to the majority of the companies in the audience. But I get asked about monthly requirements all the time. Oh, where do I submit my run-through reports? That's a question that I get on a daily basis. And the answer is nowhere. You don't have to submit any monthly reports. It's annual or quarterly. And the ones we're talking about today are mostly annual. Number two, do I need an Itin? I get asked about Itins all the time. And there are a couple of reasons why you might need an Itin. Number one, if you're trying to move to the United States, or if you're trying to eventually have an office in the United States and become a US taxpayer, you might want to consider getting an Itin. Additionally, I know that PayPal, oftentimes people have issues with PayPal if they don't have an Itin. Eventually, after about 20,000, sometimes PayPal starts asking for an Itin. There's probably a couple people in the audience that have that question right now. And in that case, I would probably recommend getting an Itin. But in most cases, you do not need an Itin in order to file. So of the people I talk to that, they'll tell me about their situation and ask if they need an Itin. Usually about 40% of them, I say, yeah, probably you should get an Itin, and 60% I say, no, you don't need one. But so it really depends on the circumstance, but those are some of the instances in which I would consider getting an Itin. And if you're just running a single member LLC, you have your own LLC, it's like a service business, you are in a, different country, you have no plans to move to the United States, no plans to become a US taxpayer, and you don't, need it for any payment processing or anything like that, typically you're not going to need an Itin. Number three, do I owe taxes? What about sales taxes? So like we talked about in the second or third slide, I think it was, most people are not going to owe a tax payment. Of course, depends on the situation. Most people are not going to owe a tax payment. It's just going to be an informational return. In terms of sales taxes, this is a question I get all the time because like in other countries, there's like VAT taxes. Every country is different. In the United States, it's governed by sales taxes, and each state has its own law in terms of sales taxes. Now, typically in the past, sales taxes have only applied to physical goods, right? If you're shipping a book or a shirt, right? Or especially if you have a retail store in a state, you definitely have to pay sales tax then. But for services, it's typically never been charged, right? Now, there have been some recent Supreme Court cases, one in particular in 2018, that have started to, shift the paradigm a little bit, but typically sales taxes are most commonly applied to products, and they're most commonly dealt with on a platform level. So if you use a platform like Shopify or Amazon, there are ways to collect sales tax automatically via those platforms many times. Most people don't necessarily need to collect sales taxes, and there's no like overarching VAT where in the US, you have to charge 5% on every invoice like you do in some places. So there's nothing like that. Most states also have what's called a de minimis exception. So if you do below $150,000 or $250,000 in sales in a particular state, you don't owe sales taxes in that state. But that, again, that's governed by a state by state framework. So especially if you're shipping physical goods and you're doing e-commerce in the United States, sales tax is something to think about and look into the regulations and the platforms that may allow you to automate collection. But for the majority of you, sales taxes are not going to be nearly as broadly applied as they are in different countries. Fourth, do I need to file every year? Typically, the answer is yes. There are certain circumstances where if you have an LLC that lies dormant for a year, you may not need to file. But if you're doing business on an annual basis, typically you're going to have to file once a year, and the annual filing will be either in March or April almost always, as we discussed. And finally, what about invoicing? I just put this in here because I get asked about invoices all the time. In certain countries, the invoicing requirements are really, really stringent. In the US, there are tens of millions of LLCs and C Corps that are in operation. If the US government asked every business owner for every invoice that they issued, that is all they would ever do. The IRS would be the biggest institution in the history of mankind. The IRS does not want to see your invoices on an annual basis. What I tell people is if there's enough information in the invoices for you to get paid, typically it's going to be sufficient. You just need to include basic business information on your invoice, your name, your address, the amount. But there are no, in certain countries, you have to report every invoice to the government, or it needs to be issued in a government standard format. That is not the case in the US. You have a ton of flexibility in terms of how you can present your invoices, how you can issue them, and how you can get paid through them. If you're getting paid through your invoices and your customers pay you, you're probably issuing a decent invoice. Keep them on hand, because if you get, in the event that you get audited, you might need to present them eventually. So you should store them and, keep them on your computer or wherever, right? But you don't need to present all of them when you do your taxes by any means on an annual basis. And so a lot of people have questions about how invoicing works and if you need to present them with your taxes. You do not need to present your invoices with the initial tax filing. And there are no industry standards. You have to have the invoice say this or that. There's nothing like that. Danny, any other frequently asked questions or anything you want to add there?
Not pertaining to these. Maybe after kind of your closing statements, I've kind of identified some broader common themes in some of the audience's questions. And so if you have some time, I can share those out.
Absolutely. So just in closing, I wanted to include a slide at the end. How do I know what I need to do for sure? We've talked a lot about general concepts and things that may apply to a broader audience, like Danny's talked about on many occasions. But the only way to know for sure what your business needs to do is to talk to somebody that knows. So we are offering free consultations to all Firstbase customers to analyze what you might need if you need to file, if you do, what you need to file, and how to help you through the process. So I've included, the deck should be available. There's a hyperlink to book a meeting with us. Talk to somebody who can understand your business and determine what you need to do, because, there are tons of different variables that can impact it. And you should have a conversation with somebody who is an expert. So with that, I'll turn it over to Danny to do some Q&A.
Yeah. And just to maybe, reiterate that point, again, for the audience, so maybe some of you guys are our customers, but, I would hope that you guys are also exploring what's best for you. I always give this spiel is that, I personally think Firstbase is a great product and tool, but it's, to be very frank, not for everybody. And so, as you guys do your research, as Max said, it's been snowing here in Texas. So I'll use this analogy. Every company is a snowflake, right? You guys are all very unique. Your businesses are very unique. And so although there are some broader themes, Max told me as we were prepping for this webinar that, there are general themes, but there are a lot of variables that make each situation very unique, which is why, there are organizations like Bookmate that offer a consultation to assess your specific situation. So a lot of the questions that I have that are here already, and Max, maybe what I'll do is actually save this chat and identify the individuals who are asking these questions, because they're very, very specific. And
right, they always are.
It might be, and which is totally fine. And it might be one of those things where, Max probably will need some more context and not able to just provide you a yes or no to a particular question. So, for those of you guys, you can schedule that consultation with Max at Bookmate to have that conversation. But I think one thing is that, I get a lot of this question where I had zero income, zero expense in 2020. And, I think this is the fourth time we're iterating this again, but, what is the tax requirement if I had zero expense, zero income in 2020?
Right. So This is a question that many people kind of wrestle with, because if you don't have any income and you don't have any expenses, you haven't started operations yet, um, it can be a tricky situation, because the one of the issues is that the IRS hasn't given out extremely clear guidelines on what the bright line is for filing. Typically, what we do is, for customers who have absolutely no revenue, if they have a bank account, if they have an EIN, if they have everything, we will file a consolidated informational report at a lower price that that reports the formation of a U.S. company, because the formation is one of the reportable transactions that is required by the IRS. But there are varying opinions on this subject, and it can depend on industry context and, when you formed it. Do you have an EIN? And a number of situational factors. So I would love to give a ironclad, backed by, court cases, analysis of yes and no. But the reality is, it exists in a bit of a gray area. And what we have typically been doing is reporting in a consolidated filing the formation of the company, but no other financial information. So that is typically the strategy that we have taken, although it may not apply to every individual scenario. Like, especially the person who says, look, I formed on December 31st and I haven't gotten my EIN back, and, I live in X or Y country. I mean, that's a difficult scenario, right? It's not exact. I mean, it's not exactly a black and white canvas that we're dealing with here, unfortunately. So we've been filing consolidated filings. That's what we've seen across the industry. But it can depend on a number of variables. And I would tell anybody who's in that situation to book a meeting, and we can talk about it and see if you may need to file a consolidated report or not. I wish I could give a better, more firm answer on that. But the best I can do is to say, book a meeting, and we'll talk about it. Um, and we'll determine the best way to move forward for you and your business.
Cool. That's helpful. And the other thing too, I guess, and I probably just didn't ask this question very well, is this definition of annual. I think some more folks have asked this question, and my apologies. I just didn't think I framed this question well to get you to answer it. So, for a 2020 upcoming tax return, whether it's March or April 15th, is the months that are being reported on this 2021 from January 2020 to December 2020, or is it January 2020 to, Feb or March 2020, depending on the filing?
Great question. Yeah, I should have covered this earlier, so my apologies. The fiscal year is from January 1st to December 31st. So that's the reporting period. So for most companies, you have from January 1st to December 31st, and then you have 3.5 months of the next year to report your transactions from the previous year. So in April, if you're filing, you're not going to be reporting anything that's happened since January. And so to that point, there may be some companies in the audience that filed their company on January 10th, right? If you formed your company in 2021, then you're not going to have any transactions, obviously, from your company from 2020, and you're not going to have to file until 2022. So it is that calendar year basis. And then you have 3.5 months of the next year to get everything ready from the previous year and submit an informational return.
Perfect. Got it. Hopefully that answers a lot of folks' questions. A quick one here. Looks like this person asked, is payroll tax monthly or yearly or both?
Yeah, so payroll tax is a trickier situation. I would say that anybody who that is paying payroll tax, that's something you should take really, really seriously. I would definitely get onboarded with a payment, like a payroll company, to manage your collection and payment of payroll taxes so that you don't have to do it yourself, because payroll taxes are one of the few things that can kind of outlive the company. Even if you close the company down, you can still be liable for payroll taxes. So the best answer I can give to that is to contact a payroll expert, a PE or PEO firm, get onboarded, and get automated payroll tax collection going, and have them file it for you on whether it's a monthly or quarterly basis. But if you have payroll taxes that you owe or need to pay or are submitting, that is, and you can meet with us and we can talk more about the specific situation and what platform might be right for you. But payroll taxes are something to take really seriously. If you have, and you typically that's with like US employees. So that person may have a little bit of a unique situation as well compared to a lot of customers around the globe. But yeah, payroll taxes, let's talk about that later.
Got it. And then a follow on to the previous, the one question before, about the fiscal year. If a company was formed in 2021, they don't need to even report or file a informational tax return for these upcoming deadline, correct?
Correct.
Okay. So whether it's the single member or multi-member informational tax return, if your company was formed in 2021, you will not have any obligations to file this upcoming tax deadlines, but your first one will be in either March or April 2022. Is that correct?
Yeah, if you formed like a single member LLC, for example, or even a C corp or whatever, on January 1st to today, so the last like 6 weeks or so, your first filing will be in either 15 or likely in either 13 or 14 months from now.
Got it. Perfect.
So those people, yeah, you can take a deep breath. If you formed in the last 6 weeks since the new year turned, you don't have to file anything for this year.
Perfect. And then I think another question is the state level tax return dependent on the state that you incorporated in, or the state that your quote unquote business is headquartered in, or both? Or how's that? What is that? Or at what state level are you filing taxes?
Right. So typically for people living outside the United States, it's going to be the state you formed in. Like, for me, for example, if I live in Minnesota, even if I have a Wyoming LLC, I'm most likely going to have to file my personal tax returns in the state of Minnesota. So even though my business is in Wyoming, I live in Minnesota, so that's where I pay taxes. So I'm going to have to pay Minnesota taxes on my personal income that I earned from my pass-through entity, for example. However, for most people who live outside the United States, they don't have a jurisdiction in the US that they are paying taxes from. So it would be, it would default to the state in which they have formed the company. Although if you have a nexus of business in a different state other than the one you formed, that is a scenario in which there's no way I would give like a blanket advice to anybody in that scenario over this call. If you have a nexus of business in a US state that is other than the state you formed your business in, you definitely need to get some advice on how to best file, because at that point, there's too much context to just cover it without knowing more.
Perfect. Okay. I know, our kind of hour is coming. We're a little bit 3 minutes approaching. Just to let the folks know, this recording and the presentation will be sent out, so that way you have that as a reference. And then Max, do you want to just share your company's website, and here, if you want to maybe go back to your Calendly link, and actually, I don't know if you actually want to expose it, so that way if people want to book it right now, or if you want to message it to everybody in the chat. I don't know if you would be open to doing that, but
sure.
It looks like people have had some questions about that.
Let's check it out. If you give me 1 second, I can pull it up. I've always got my 3 monitor setup going here. So I can just pull it up on a different monitor. And then message it into the Zoom chat. Let's see.
Perfect. Well, yeah, I'll let Max share his information and calendar link to have that conversation.
All right. Yeah. And by the way, I just dropped it into the chat. So if you want to book a consultation with us, just look in the chat. There's a link that you can go there and book.
Thank you. Awesome. And I really appreciate everyone's time. I know I didn't get to all of these questions. There's a lot of good ones, but it sounds like, on a broad level, a lot of the questions were pertaining to timeline and kind of deadlines. And I formed in this month of 2020. Is it, am I required to do it in 2021? And those sorts of questions. I think once I send the recording over in the presentation, for those maybe that missed it, those sort of responses, you'll be able to get that. But, in the meantime, really appreciate everybody's time. Max and his firm are great. They're a Firstbase.io partner in the Firstbase.io network, and somebody that's been a great resource for all of our customers and offering a lot of really great stuff. So, I appreciate your time. I appreciate everyone's time. I know a lot of you guys are all over the world, so this is an odd hour for you. So thank you for just being physically present. And I'll follow up with everybody shortly. And Max, if you want to just maybe say your last 2 bits, and then we can let everybody go.
Absolutely. Well, Danny, thank you. This has been amazing. I hope that our comments and the presentation that we were able to give today has helped people put some context around what their U.S. requirements might be. I see there's a ton of, I just checked the chat for the first time, and I can see there's just a ton of questions and really good ones too. And ones that would pertain to, some are specific, some are more general, but we're available to take everybody's questions. So, we didn't get to everything today, but book a meeting with us. We will talk through it. We'll go through it. And, Bookmate, I guess the domain, if you want to go to the website, is www.trybookmate.co. So you can find more information on the website. You can book a meeting with us, whether it's about tax, whether it's about bookkeeping, financial reporting, whether it's about custom reports, business plans, etc., forecasting, that kind of stuff. Let us know what you need. We're happy to help. We specialize in international owners of U.S. businesses. That's what we do. So we'll continue the conversation over the coming weeks as we progress through this tax season and, get to the finish line in April. So happy to be here. Thank you so much to Danny and everybody listening. But that's all I got.
Cool. Thanks so much, Max. And thanks everybody. I'm going to go ahead and end this. I am going to save this chat. So Max, I can send it to you.
That'd be great.
If that's helpful. And then there's some very specific Firstbase.io questions. I'm going to pass you guys over to our customer team so they can follow up. But thank you again, everybody. And have a great, afternoon, evening, or morning. And thank you guys.